Good morning, everyone. Thanks for joining us. I have a couple of provisions here related to the tax law that are affecting businesses' ability to potentially apply for refunds via amended tax filings. So the first topic I want to cover is net operating losses. So basically a net operating loss is when your deductions exceed your income items for a year. In the past, net operating losses could be carried back 2 years to offset prior taxable income and allow you to get a refund of prior taxes paid. After the Tax Cuts and Jobs Act that passed at the end of 2017, that act took away our ability to have carrybacks of net operating losses. So what this new bill did is it gave us the ability to carry back losses from 2018, 19, and 20, and those losses will be able to be carried back 5 years to offset prior year's profits. In addition to that feature, we also have the temporary repeal of the taxable income limitation. So what happened after the Tax Cuts and Jobs Act passed is an NOL that was carried forward into a future year could only be used to offset 80% of taxable income. Since that was unfavorable to the taxpayer, the CARES Act came about and said for years beginning before 2021, we will be able to use 100% of your NOL to offset taxable income. So that's for 2018, 19, and 20. So if you have that instance, there's a potential for you to be able to amend prior year returns to offset prior year taxable income and get some refunds. Another loss limitation that was put in place by the Tax Cuts and Jobs Act was the excess business loss rule. And this was a rule set about at the individual level. And it had to do with losses from a Schedule C or a flow-through entity like a partnership or S corporation. And basically the ability to deduct those losses if they exceeded $250,000 if you were single or $500,000 if you were married filing jointly was severely limited. That you could only deduct up to, for instance, for a married filing jointly family, $500,000, and then the rest of the loss was carried forward. So what the new law did is it put that provision on the back burner so that for tax years 2018, 19, and 20 again, you will be able to deduct those business losses in full. So if you had a tax return for 2018 that was limited for those losses, you'll have the ability to amend that return and go back and get some of that money. Another provision that was put in place, again, the Tax Cuts and Jobs Act, these were revenue raisers that offset some of the tax cuts that were put in place, is the limitation on business interest deductions. So in general, this applies to taxpayers with average annual gross receipts in excess of $26 million. It also applies to partnerships if you have losses that are allocated more than 35% to limited partners. But basically what happened was the deductibility of your interest expense was limited to only 30% of what was known as your adjusted taxable income. And this was for, this started in 2018 as well. What the new law is doing is it's saying you can take that limit from 30% to 50% for tax years beginning in 2019 or 2020. In addition, for tax year 2020, if you have a bad year in 2020, which we're, probably all going to be seeing, you'll be able to use your 2019 adjusted taxable income, which presumably would be a higher number, to use this limitation and instead of the lower 2020 number. And then the other provision is another favorable provision for taxpayers. It's the fix to the qualified improvement property. So qualified improvement property is defined as improvements made to the interior portion of a non-residential building if the improvement is placed in service after the building was first placed in service. So we're not talking about new construction here. So these improvements are now going to qualify for immediate expensing as 15-year assets, subject to 100% bonus depreciation. And this provision as well is retroactive to January 1st, 2018. As I mentioned, a lot of these provisions have the potential for some amended returns and refund opportunities. Here at Dunlap SLK, if you're a client, we are searching through your tax returns to make sure that we don't miss out on any of these opportunities for you. So your personal accountant will be in touch with you regarding that.
Okay, do we have any questions for Tracy at this time? I'll give people a couple minutes to type in the box here, and if not, we'll move on. Okay, Tracy, I'm not seeing any questions, so at this point, we're going to move on.